Good evening, everyone, and welcome to Demographica Live. It's been a very busy week, and we've been all really looking forward to discussing this topic today. So, if you haven't seen what's been going on, last week the Reddit forum r/Wall Street Bets spurred on a wave of investments in the stock of the 37-year-old game retailer GameStop. The stock had been shorted by professional investors. What this means is um, it's a sort of high risk practice that's often done by hedge funds where they borrow shares and then immediately sell them in order to lower the price and then purchase those shares again, sell them back to the lender, and keep any money that was made, pocketing the difference essentially. Wall Street Bets forced the stock price to surge, and according to partners at S3, last Friday, GameStop short sellers had lost almost $20 billion just this year alone. So hedge funds that have been using this practice of shorting stocks have lost a lot of money this year, and it created quite a large sentiment of anti-hedge fund and anti-shorting feeling amongst not just people that have been involved, but also people across the political spectrum. Joining us to discuss what's been going on is the managing director of Coastal View Marketing and a good friend of mine, Rami Holzman, and of course Brett Lee. Guys, it's an absolute pleasure to have you here.
Thanks, mate.
Rami, what a week it's been. What are some of your sort of initial thoughts of early on what was going on, what was happening, and then some of the sort of subsequent repercussions of what's happened in this still, as we said before, relatively fresh story?
Sure. Yeah, I mean, I think there's two main things coming out of this that are important to note. And I think the first thing that's most important is that this wasn't necessarily a scheme in terms of buy this stock, we're going to push it up. I think what this was a once in a lifetime opportunity where people saw a big discrepancy and a big issue in the market where there were more shares shorted than there were actually available on the open market to buy that investors actually held. So I think what happened is people saw this big opportunity where really there was a situation that should never actually happen in the first place. And I think people saw that they could capitalize on this and potentially make a shit load of money, which ended up happening. So I think that's the important thing to note was this wasn't a typical sort of Wolf of Wall Street, penny stocks sort of story where, you would get these internet boards and these emailers and things going, oh, buy this little company that's got like 2 million, 2 million in revenue or whatever, or like less than that. And, it kind of flies up to a $2 billion company overnight, yet this company doesn't even have any products. This wasn't it. And I think it's important for people to get the distinction that people were simply taking a situation that should never have really been able to happen and basically milking it for all it's worth, I think. So I think that's important to note.
Do you think that this now has gone beyond that? There's kind of, it started off either of you as an opportunity, an investment opportunity, and has now so many people have got involved in this. There's been such a large outcry against what was initially going on. Do you think it's past that, or do you think for many people this is still an opportunity to make as much money as possible from the share?
I think this is definitely I think there's definitely a lot of people who are getting in who probably don't have a understanding maybe of what's going on or the risk involved. So I think what we're seeing is a lot of people maybe piling in and just seeing these dollar signs, flying. But what we're also seeing is other heavily shorted stocks that are also flying as well. So I think, and not just in America as well. We're seeing stocks in the European market as well that are heavily shorted, that are being buying up and are subsequently skyrocketing. So I think it's sort of an effect of what happened with GameStop. Is people thought, well, how can we make more money? Kind of what is the next kind of big squeeze, so to speak. But I think it's important to make a distinction that what's going on in other markets where you've got someone like AMC Theaters, their stock wasn't as heavily shorted, so you didn't get anywhere close to over 100%. So I think what's happening in those stocks is just a reaction to what's been happening in GameStop. And I think I think what's going on mostly as well is a big fuck you to Wall Street. I mean, these hedge funds and things like that got bailed out by the billions back in 2008, that kept their jobs, that CEOs and things were making record earnings during these times, and that these companies got away completely scot-free. Yet millions and millions of Americans and people all around the world suffered under their hands. Nobody faced any consequences. So I think a lot of this is, I see posts on Reddit constantly, people saying, this isn't about the money. For me, this is just
Yeah,
about pure spot and sticking it to
yeah,
the man. So I think
Yeah.
what's happening as well, people are seeing these news reports of hedge funds losing tens of billions of dollars and things, and I think people are just happy to stick it to them and watch them bleed.
yeah. Has that kind of been your
Yeah.
interpretation as well, Brett?
Pretty much, yeah. I think my internet's dropping out a bit, so let me know if I'm lagging too much. But
Really?
yeah, I mean, I use Reddit quite a lot, and to sort of see on the sort of front page, see like various, not just the bets subreddit, but loads of subreddits participating in the sort of. It looks more like a movement, I think, online now, especially on Reddit anyway, where people are cheering each other on to they sort of stick it to the man and go against Wall Street, and it's quite crazy to watch this sort of online thing sprout up rather than it. It's not like you're watching people in the streets protest with placards or something. Instead, you're seeing these redditors posting memes of like I've seen, like, I think we were looking at them the other day, Jack, like these famous scenes in films, and trying to adding the sort of the captions over the top on that, and using that as motivation to get able to hold their their share in the stocks. Yeah, it's quite interesting to watch.
It's interesting to see. You both mentioned the sort of online presence that this has taken, and it has been a solely online movement, if you will. One of the things that the founder of Wall Street Bets, Jamie Rogozinski, said in an interview with The Guardian was that Wall Street has been getting away from its original intent, which was to provide capital to society. Little by little, it's turned into a casino, a place for speculative games. And it's interesting that you say that this isn't just some people who have just got into trading that have been ridiculous and tried to lead people astray into plowing a load of money into this stock in order to sell it further on. This is people that have experience in this stuff. This is not just people sitting in their basements. These are intelligent, tactical, aggressive, high risk moves to try and get one over on the larger hedge funds. And that's one of the things that I think has seemingly taken Wall Street by surprise, is that this was done in such an orchestrated way.
Yeah, I mean, I think it's pretty funny to see how a bunch of retail investors, and let's face it, with the likes of Robinhood and Webull and these, deep discount, very cheap brokers that have opened up the markets to millions of people who don't have thousands of dollars to invest, who maybe only have a few $100s, who don't want to pay, $10, $20 just to open, a trade or whatever, which could be 20% of their account. We've had this massive influx of people investing, not just this past couple of weeks, but this past 2 years as well. So I think it's really good to see that you've got a younger market now coming in and understanding finance and understanding investments and things, and kind of leveling the playing field, so to speak, and kind of showing Wall Street, look, just because we're small doesn't mean we're little. Collectively, we can have a lot of influence and things like that. And I think it's really good to see that there are some really intelligent people, as you mentioned. I think what's been really frustrating and annoying to see is the kind of the media slant and the sort of experts and hedge fund managers and things who've gone on to the likes of Bloomberg and CNBC and things like that, kind of dumbing down the intelligence of people on Reddit. And let's face it, these people saw an issue. They saw a discrepancy in the market that should not have happened, and they capitalized off that. That is extremely intelligent players. These big institution investors weren't doing this. They weren't, talking about this and pumping this. And we've got Keith Gill, who bought in, $55,000 worth back in, what are we, August 2019 or something. He was saying that GameStop was undervalued at the time. I mean, I'm sure he would never have envisioned, it blowing up this high, but he saw this and he made a bet. You have Michael Burry, the legendary investor from The Big Short. He capitalized this. He saw what was going on, back in 2019 as well. So I think it's important that Wall Street and these, guys at the top understand that there are some seriously intelligent people out there, people who understand the market a lot more. Because at the end of the day, Wall Street is, they have analysts and they're intelligent and things. They make these financial models, but nothing beats the people who use these services. If you go into a GameStop and you see, oh, it looks busy. You go the next week, oh, it looks busy. It doesn't take a rocket scientist to think, oh, hang on, maybe GameStop is doing all right. I saw maybe a year ago this was quite empty, but now, they seem to be turning around. That real boots on the ground mentality, investing in your own backyard and investing in what you know, I think is so important. Yet Wall Street, I don't think has that luxury. Yet I think as a whole, these big retail investors had that luxury of being able to see the market and these companies kind of be affected in real time. So I think they do have that edge that others kind of downplay them for.
Yeah, what do you think will be the reaction then from this? Do you think that we'll begin to see the sort of democratization of Wall Street, of trading, or do you think that there's going to be a huge pushback like there already has been? The issues of market manipulation, a lot of fake news stories, especially to start this week off. Do you think that we are going to see a move towards that kind of trading, or do you think that, like it always seems to do, the regulations will come in to protect the big boys?
Yeah, I mean, sadly, I can't see a way of this system changing too much in terms of leveling out the playing field. I mean, let's face it, that the issue is a lot of the deals are brokered and settled through these big Wall Street firms and things like that. So to actually make some sort of decentralized system, I think will be incredibly difficult. I guess this is what the big push for crypto is that, it is, a shared ledger and that there is that kind of sense of accountability, that there is no single ownership.
Yeah.
That will be the biggest turnaround that I can see. But in order for that to become a thing, it's got to be adopted. And I can't see this being adopted mass market because it affects the guys at the top too much.
Do you think, I know we've got Ryan watching, and I know that, this is an area that Ryan's really interested in. Do you think the next step in this movement, if you will, like Brett said, is to cryptocurrency? Do you think that's where this inevitably heads, or, can you not see that? Can you not see that happening?
I think the issue I have with cryptocurrency is the volatility at the minute. It's not something that can be reliably used on a day-to-day basis. If you're looking at something like Bitcoin, for example, if one coin is worth $20,000 one day, then within a month it's worth $40,000. If you're a business that makes kind of understanding and trying to work out cash flow and your balance sheet and things like that, it makes it incredibly difficult to plan into the future. At the end of the day, you want something that's stable, that's going to hold its value, so that that the money you receive in a month's time from your supplier, that's going to be worth the same as the goods that you sold it for. So I think that's probably one of the biggest issues that's struggling with cryptocurrencies. There are cryptocurrencies that aim to be stable, but again, it's trying to get it to that kind of mass adoption state. And I think there are issues with taxation, and there's issues with the regulatory side of things, the legal side of things, that would make this sort of mass adaptation of cryptocurrencies. I think that would make it easy for people to use on a day-to-day basis. I think if we could figure out those issues and it would be available for people to use on a day-to-day basis, then I think there's every opportunity that this takes over other major fiats, I think.
Ryan asks, on this topic, do you think in 10 years' time that we may look back on the GameStop saga as the moment that sparked a globally unified and peaceful form of digital revolution? Really interesting question, but I don't know if you've got sort of any thoughts on whether that will happen or whether that's something you'd like to see.
I mean, I don't know if it could necessarily happen in that sort of way. I mean, the way that he's sort of described it there, it sounds quite all-encompassing and very. I just don't. I think it's shown the power that these sort of social media websites have, the user, the communities that form on those websites have. And I think that, like we've sort of said, they're severely underestimated in terms of their capabilities. I don't really know why people are looked down upon because they use a certain social media website like Reddit or whatever. But yeah, I mean, I definitely think that I would like to see more movement like this online because I think it's a new way of. I don't think people are as taken by physical like protests and the old traditional way of protesting anymore. I don't know if people are as uh, I don't know what's the word, sort of interested by it or enamored by it.
Yeah. Yeah, no, I think it's I guess my problem with it and with a lot of these movements is that at the time, I think it was the same with the Occupy Wall Street movement. At the time, seemed like a turning point, seemed like a really big moment. And I know that there are stark differences in these two things, but I think that there is a sort of sense, an underlying sense that many people are involved for the same reasons. As like you said, this big fuck you to Wall Street and big money. My worry is that these sort of things are fleeting and that don't don't result in lasting change. And that would be my problem, is that I think that they show,
Yeah.
they highlight massive inequalities. You know, we have people, and I know we've got this clip of Leon Cooperman, a sort of fairly well established trader who was on a news network and was moaning that people who were just sat on their arse all day were able to sit and trade stocks because he'd lost a bunch of money. You know, it's great to see those kinds of people annoyed, but unfortunately, people like Leon Cooperman are the ones who are setting the rules and have been setting the rules. And my worry is that it won't last. It won't result in the change that we need to see. You know, there seems to be a lot more action when Leon Cooperman is annoyed than when a mother of three down the road gets screwed over constantly by the financial system. And that's what I'd like to see.
Something that concerns me is these people on Wall Street Bets who have done this and getting a bit too cocky and going after other things. Because I've already seen on Reddit, I think it was on Wall Street Bets, them talk about going after the silver market. And I don't really know entirely the situation there or how that works, but I know. But I was just, when I saw the thread, I thought, you know, I don't want them to sort of to push their luck too much and then to dismantle themselves by accident or something. But I do think that this movement sets precedent for how people can utilize social media.
Yeah, for sure.
Yeah.
Rami, there's something that I wanted to ask you about actually, about especially about the silver and moving into other stocks.
Sure.
I mean, what did you make of this morning? I guess it was a lot of people saying that it was a lot of mainstream media outlets covering that the next target for Wall Street Bets was going to be silver. A lot of people on Wall Street Bets saying that this wasn't true and it's trying to move people away from the GameStop stock. You know, what did you make of that? And I guess the strategy going forward for those that are involved in the Wall Street Bets community.
Sure. I mean, I think the issue is that Wall Street Bets has been around for quite a while. You know, I've been a member for 4 or 5 years or so when it was small. And you've had a series of seriously intelligent people putting up, you know, really good due diligence on some really solid companies and things like that. And I think it's important to note that, you know, the name Wall Street Bets is a subreddit for speculative, you know, risky kind of long shot sort of, you know, investments. Is not, you know, a boomer kind of, you know, AT&T, Microsoft kind of subreddit. But then again, you know, there are people who are putting forward really solid cases. You know, it's not just, oh, buy this stock just because it's cheap or whatever. You know, people are actually putting forward solid cases. And I think the issue is what's happened is over this last couple of weeks, we've seen the numbers, you know, the subscriber numbers absolutely skyrocket. So you're having some very new people to the market kind of getting in, people who really might not understand the market. And I think what we've seen is a lot of bots getting in the market as well. There's clear evidence of people who were getting in last week and things like that, talking about stocks that, what were other than GameStop or whatever, who had, no post history or were new accounts or something like that, and all kind of saying the same thing. So I think there is no evidence of market manipulation from that, in terms of diversing away from GameStop. But as someone who understands, Reddit accounts and Reddit bots and things, and how people utilize Reddit in terms of kind of pushing a narrative and how it can happen, and kind of experience of knowing people who can make that sort of thing happen, I know doing something like moving another stock really would not be difficult, especially with the deep pockets that these guys have. There are sellers who sell aged Reddit accounts. You can buy accounts that are like 5, 6, 7, 8, 9, 10 years old, and they've got karma already, they've got post history already. You can do this. You can pay quite a small fee, and you can buy these accounts. You can buy these accounts en masse, and there are software out there that you can do that will create posts and will post comments and threads and things like that. So manipulating a thread like that really wouldn't be difficult. And the trouble is we've now got something like 7, 8 million people subscribed to Wall Street Bets, which is absolutely astronomical. I remember when it was under 100,000, a few 100,000. It was quite a small community. So the opportunity to manipulate the market like that is certainly possible. And I think the evidence that we've seen in terms of silver is one that there is concrete evidence, not to market manipulation in itself, but that these big hedge funds have massive, massive long positions in silver themselves. One of the most notable candidates is Citadel, which is a company that's been going around in the media for several weeks, that's been heavily tied to GameStop. They are heavily invested into silver, SLV. So there is a very strong connection there, and there's a very strong connection that there is a vested interest in making the stock price go up. So although I don't think there will ever be evidence that will ever link Citadel and other big hedge funds and other big Wall Street guys to manipulating the stock, I think that you would be foolish to not at least question that this would be incredibly easy to do.
Yeah.
We've already seen that SLV has been moving, and the media has been jumping on it, and knowing how easy it is for markets to move and things to be moved. These are companies that are worth billions. They have billions of dollars under assets. I mean, I'm involved in SEO and digital marketing and things like that, which is nothing remotely close to the markets or whatever. But I do know how easy it is to get an article published on somewhere like Forbes or Bloomberg or something like that for a couple of $100, a few $1,000s. I can make that happen. You know what? If I had deep pockets, I could set up a company and get a tremendous amount of exposure from Reddit, from any sort of online, even The Guardian, even these big kind of media companies and things like that. Anywhere I want to, I can do it. So for these guys to drop a few million and to get, exposure to a stock or something, I'm not saying it has happened because I don't have proof of it, of course, but it really would not be difficult at all. So it really just surprised me that these sorts of moves are going on. Is it them? Who knows? Is it likely that it's them? Entirely possible.
Yeah.
These guys
Something else. Yeah, something else that. Sorry, Remy, go ahead.
No, sorry, I was just going to say, these companies have lost billions, so for them to try and make up a few, would not be difficult. For them to shell 10 million or so on a media advertisement, then it's peanuts for them.
Yeah, just going to say, Ryan also points out in response to our conversation about his question, and I think that this ties in really nicely with what you were saying and what Brett was saying earlier. I.e., this not just being people on Reddit, not that devalues their input, but Elon Musk now being involved. We're not just talking about, and then Ryan also talks about in the long term needing more education and probably more credibility to be able to be adopted in the mainstream for these things like cryptocurrencies or whatever. But we're now seeing really big players in the world, the world's wealthiest man, fully engaging in these communities, fully engaging in these movements. Do you think that this is because somebody like Elon Musk sees this as I mean, an opportunity for him as a businessman, or do you think it's because people like him genuinely want to see moves away from this kind of thing? I think Elon Musk particularly is an interesting case because he seems to me to be somebody who wants to keep this alternative figure image. He doesn't want to be seen as somebody who's just another rich guy. He wants to be seen as somebody who's very much on the outskirts, who's in touch with culture. So to see him be pushing this as hard as he is, I think is interesting. So does that say to you that this isn't just another one of these movements? There's sort of genuine interest from people like him, and that could spark change.
Yeah, I mean, especially for Elon Musk, there's something very personal with him and Tesla. I mean, Tesla for years has been hated by Wall Street. It's been heavily shorted. He's always been very, very vocal about Wall Street and being against, the shorters and things like that, hanging up on analysts during earnings calls and things like that, releasing boxer shorts called shorty shorts or something like that in a relationship. So I think it's personal because I think what a lot of people don't realize is when you short a stock, these hedge funds they're hoping that these companies go bankrupt.
Yeah.
But there's a real consequence to that because GameStop has what 15,000 employees. So these guys are essentially betting that 14 to 15,000 jobs, people are going to be made unemployed. That's essentially what they're doing. So there's something very, very personal that is going on. And I think for someone like Elon Musk, I think who's been under pressure for years and years and years, has sort of seen that. And I think he's won as well. He's seen his stock absolutely explode. He's seen that massive support from retail buyers, and that was another situation where you saw it was Wall Street, Main Street versus Wall Street. Wall Street constantly said, Tesla is not worth this, Tesla's going bankrupt, Tesla this, Tesla that. And you had the retail and Main Street saying, no, we like the stock, we want to buy, we believe in Elon Musk and things like that. So there was a big divide there. So I think for Elon Musk, it's certainly something that's personal. So I can see why he did jump on board and kind of side with Main Street on this one. And shorting is a difficult question because it's something that's needed. It's a normal checks and balance in the market, but also there is an opportunity to manipulate it heavily. I mean, I have an excellent article that I can send over that you can link to that was written in 2014, which was basically a list various methods on how these kind of hedge funds and things like that get to basically, ideally try and make these companies bankrupt and drive the price to zero. And for those who know Jim Cramer, who's a TV presenter now and Wall Street guy who was a massive hedge fund owner himself, there was an interview back in 2006 that got deleted very, very quickly. That's available now, thank goodness. It was archived. And he basically listed all these, secrets and dirty secrets that hedge funds can use to essentially drive stock prices down, to zero, basically saying how hedge funds can manipulate the market. And he spells it out, in this 10-minute interview, exactly what he would do, whether it was, getting an analyst to do something, whether it was, getting a media company to do this or to do that, real dirty secrets that these guys would use. So yeah, these Wall Street guys, they don't care. They don't care at all. I think they're so disconnected from how the world runs, and it is a shame because I think, as you pointed back earlier, there was a sense that Wall Street was around originally, to provide capital. I mean, if you look at a company like J.P. Morgan and these other companies, they saved a lot of businesses and individuals during the Great Depression and things like that by providing a massive amount of capital and liquidity into the market. And they do provide a really good service that is beneficial to a lot of companies. I think what's happened though is people have got greedy though. People have thought, we can make more and more and more and more money, and there's been this complete disconnect from kind of what they used to be and what they used to stand. I mean, I think it's great that we're seeing such unity. I mean, I was saying to you and a couple of other friends, I don't think I've ever seen anything like all sides of the political spectrum as much as what's been going on now. I mean, to see Donald Trump Jr., AOC and Ted Cruz all on the same page, it is something of a fairy tale. It's incredible. It's just whether momentum can be kept up, which is, as you guys say, is unlikely. And I think I agree. I don't see the next step I can't see what's the next step to this that sort of helps, the little guy kind of get on top. I think, in my mind, if the little guy wants to get on top, then the little guy needs to join these guys at their own game. Investing is one of the best ways that ordinary people can create long-term wealth and can become wealthy, and become rich, and that they can then pass this money on to generations. We see the likes of Robinhood and Webull and these discount brokers really trying to open up the market and provide, really accessible ways of getting into the market. You've got brilliant systems nowadays where you can invest £25 as little as like £25 a month, and you don't need to do anything. It's direct deposit, the money's taken into your account, and it invests in the market for you. That money over 30, 40 years, until people retire, can be worth a fortune. So I think the best thing that would happen next is to people get in and try and join the game, because if people join the game, then they're going to be coming out on top of this. We've seen that, just investing in a simple index fund, you're going to make 7, 8, 9% return on your money every year. I think if people are then educated and have the ability to do so, then I think that's the biggest FU you can do, because I think that's going to be the biggest equalizer in the markets, is that people can get wealthy themselves. People can kind of get on that system where they can build their own long-term. Sure, they're not going to lose hedge funds billions, but they're at least going to put themselves in a position where they can, get themselves out of a tough situation and set themselves up for a really good retirement in years to come.
Yeah, I mean, I couldn't have put it.
It's going to be paramount.
Yeah, I couldn't have put it any better. And it's, really interesting looking at the political position that this has put a lot of people in. Rami, you and I, we went to university together, and I can't, you couldn't count on two hands the amount of times that we've sat in the pub talking about Wall Street and economics and having these debates. And we've been through this whole thing completely on the same side. And I think that's the injustice of it, and the frustration and the clarity that people have been provided with. That this isn't a free market. We're not talking about a free market here. We're talking about something that it's easily manipulated in the favor of those who are already wealthy. So I think that's been, it's been fascinating to see people from across the aisle come together and support what's been going on. Gabe, our editor, puts in the chat on the 28th of January, Wall Street Bets had 400,000 comments. A week before, they had 14,000. And if that doesn't show you how much that this has grown, then I don't know what will. Remy, are there any other closing remarks you want to make, or anything that we should look out for in the next sort of 2 weeks?
I think the biggest thing short term is going to be talk of regulations. I mean, I know we're probably running out of time now, but maybe next week or something we can revisit. But I would imagine regulations are going to be on the top of my mind, on the top of the minds of politicians. We've already seen a lot of these Wall Street guys and hedge fund guys and things going on, the likes of CNBC and things, and saying that there should be tougher restrictions. The trouble is what people don't realize is these regulations are going to be for their benefit. They're going to be regulating retail investors to prevent them from, buying a margin and from buying options. Options are essentially the right, but not the obligation to buy or sell, 100 shares of the underlying security. So for me, I could take a position in GameStop for a fraction of the price of what it would cost me to buy 100 shares now. So it offers you quite a bit of leverage to get into a position, which is why a lot of people have made an absolute crap ton of money, not just holding the stock, but by holding options. So I would probably imagine that we're going to see maybe some calls for tighter regulations on that, where it's going to be maybe, I don't know, you're going to have a certain income, or you're going to have to take a test, or you're going to have a certain understanding or a certain income or something to get into that game. Restricting people getting into these markets is going to play to their advantage, because they've been shown that they can get caught out on this by these dumb idiots on Main Street with $100 for their name. These guys who are worth $100 billion plus have been completely royally screwed over. So I think there's a big issue for them, and I think the way that they get around that is by making it harder for people to get into the game. Making investing as inaccessible as possible. That's what I would do if I was in Wall Street, is I would make it as difficult as possible for these guys to make in. How do you do that? You regulate the markets. And I think that's an important distinction that people should understand and should look into, is regulations most of the time do not help you or I. They're not designed to protect you or I. They're designed to help those who push for them. It's the lobbyists and things who have got the money to regulate these industries to protect you. But at the end of the day, these are the guys who can afford to do it. So they stand to benefit because they squeeze out the little guys. It's no different to what's been going on in the cannabis market in the States.
Yeah, yeah.
The exorbitant amounts of regulations and things like that to open up a growth. These farmers and things who've been struggling and being priced out the market from, Chinese soya and things like that. These farmers have an opportunity to, small farmers have an opportunity to make a lot of money. Same in the UK, from to transfer over to hemp and cannabis and things like that. However, we've seen the regulations that, you've got to have a certain license and you've got to have this and that and that. That costs millions of pounds and dollars that small farmers don't have the luxury of doing. Don't have the luxury of hiring lawyers to figure all this out. Yet these guys at the top who are worth billions, it's nothing for them. These are the guys who are pushing these regulations. So I think people should understand, don't jump too quick on trying to promote regulations, because they're going to backfire. They're going to be hurting. You're right. Look at 2008, 2009. People were pushing for regulations, but what happened? Barely anything.
Yeah.
And that was one of the biggest collapses we've ever seen in the financial, system. So I think that is not going to help. What's going to happen is people vote with their wallets. If you don't like what these guys are doing, then having the opportunity to vote against that, to not buy their products, to invest out of them, to invest yourself, to invest in other companies, who are trying to move away from that. Crypto, whether that's the answer or not, who knows? That could be a way out. That could be a way of decentralizing and making the system fairer. But I think the biggest thing is keep an eye on that, because I'd imagine there'll be a lot of. You've got the Attorney General, I think it is, of Massachusetts, who came out with a complete stupid statement that he wants to see GameStop, halted for 30 days trading or something like that. You've got people who honestly have this sentiment that they think that the public is too dumb, is too stupid, that they need to be held, which I find really, really, really frustrating, because we're seeing these regulations come in that are completely, trying to helicopter parent people. These people think that people are too stupid to know what's best for them. That what's next? We can have regulations on, cars and things like that, and coffee cups because they're too hot and things like that. People need to fail. People need to understand that there are ramifications and things like that. People can't be handheld all the time. If you're investing in GameStop now, you need to have an ounce of intelligence to know that this is pure speculation and that this is a bet that could make you a lot of money or could lose you a lot of money. And there needs to be more personal responsibility put on that, I think. So I don't think regulation is the way to go. I think it's going to come, but I think the way to go is educating yourself and on these sort of instruments and finances, personal finance, and having that accessibility where people can learn about these things, which I think companies are slowly starting to do. They're trying to make personal finance and the financial markets more accessible. And I think that's the way to go, is through education, not through regulation. If people are educated, then they're not going to make the mistakes that these Wall Street guys are claiming that people are going to do. They're claiming that these people are going to be losing money and that, nothing good is going to come out of that. But if that's the case, then surely the answer is to then educate people more. They should be saying, right, well, if that's the case, we want people to learn. We want people to learn how the markets work. But they're not. They're not pushing for that at all. They're pushing for people to not get in the market at all. So it's, yeah.
It's I couldn't agree more. I couldn't agree more. And unfortunately, we've run out of time. But Rami, thank you so much for joining us, mate. It's fascinating speaking to you as always. We'll make sure we revisit this, because I think a lot of people are really interested to see where this goes. And I think when we're talking about education, let's lead by example. Let's keep having these conversations about this sort of stuff and the direction it should go in. What I'd like to do is play the show out by watching the Leon Cooperman video. I think that'd be a great way to back up your point. So Rami, Brett, thank you so much for joining us. Make sure you like and subscribe, everybody, and we'll see you again next Monday. Enjoy the video.
The reason the market is doing what it's doing is people are sitting at home, getting the checks from the government, okay? And this fair share is a bullshit concept. It's just a way of attacking wealthy people. And, I think it's inappropriate. We all got to work together and pull together.